Good morning, everyone. It is April the 29th, 2016. Time to end the month of trading in April. This tends to hold markets in a range. It discourages selling because most trust departments, mutual funds, and a lot of hedge funds can or are biased to trade or can only trade from the long side of the month, and their compensation, of course, is based on performance. So while the market can sell on the end of the month, end of the quarter, end of the half year, end of the year, it usually doesn't. So we're going to play for a trading range in all markets today with the idea that we'll have a trading range because it is in the month and the large major institutions or players are sidelined. It's also a pause day for Treasury. The 2, 5, 7-year auctions are over, so the major institutions that wanted 2, 5, 7-year paper are sidelined. They fulfilled those needs, and the primary dealers that I think own about just under 30% of this auction aren't inclined to sell it off either, and they're balancing their books. So again, everything works to hold the market in a trading range. There's points towards a trading range. We do have a lot of news today that can impact the trading. Personal income is called up 0.3. Personal spending plus 0.2. Core PCE plus 0.1. Employment cost index plus 0.6. That seems a little high given the work situation. Chicago PMI seems a little high at 53.4 given the slowdown in automobile sales. That one could come in lower than forecast. Consumer sentiment 90.4. That could come in lower than forecast. And Baker Hughes rig count, don't know what it is. Last month or last week was 471. The focus will be personal spending, Chicago PMI, and then consumer sentiment in that order. The market is pointed lower right now. I don't think it will break, so our first buy will be 21 to 25. 17 to 13 for buy 2. Now, if the E-mini rallies with a lot of strength and reverses like it did yesterday morning, Treasuries will be under pressure. I think we can go a little bit lower, but I like to buy against 24 to get started. On the sell side, 31 to 03 is sell 1, and second sell will be 7 to 11. Looking at the 30-year, it is pointed lower right now. Remember, these guys make you buy into weakness, so 8 to 12 is first area of support and could hold. 1 to 5 will be buy 1. Then 21 to 25 will be buy 2. On the upside right now, we've got Astrotate up stopped at 21. We have this spill at 22. We've got this low at 23. So 20 to 24. 1. Sell 1, 27 to 31. Sell 2, 7 to 11. But I do anticipate a trading range in Treasuries. Gold was very strong overnight, and again, I just think, I mean, it's just absolute. Obama is touring the world right now, getting all the perks and bennies he can, as most presidents do in the last year, the kind of their farewell tour. I bet you the people that have been living off his largesse are going to be disappointed to see him leave, but and to have gold rally like this when he's out there telling the world how good things are and how stable things are is a bit ironic. We've got this high up here at 87.80. I haven't been above that in 180 days. So when you just start to look at where resistance is, probably 1300, stops above 1300 is a reasonable expectation on this move. Obviously, we've got to get through 87 to get there. The overnight high is 83.30. That is resistance, so selling 83.85, sell 1. 89.91, sell 2. On the buy side, we've got volume at 77, so 75, 77 buy 1. 70, 72 buy 2. The economic news out of Europe across the board, the only thing that was down was German retail sales, but otherwise unemployment improved pretty much across Europe. GDP was reported for most countries a little bit higher than forecast. For the EU, it was higher than forecast. So the economy is picking up in Europe, and the dollar sold. The euro was higher off of that news, and it's pointed higher. So 14.50 is where we are for resistance. So 25, sell 1, sell 2, 14.50. Poor Mario. His dreams are not working out in his favor. Buy 1, 114 even. Buy 2, 13.75. Market looks higher. Can sell failure to take out the overnight hole and hold it. The selling started in London. There was selling at 25. Crude again has separated from the fundamentals. I do believe there is some central bank support out there for crude. They figured out that they may not have to buy the entire stock market, or at least the energy sector, if they can keep crude pointed higher. And we pointed to 46.50 to really 47 was the next band of resistance, with the low volume number at 46.85. So 50 to 75 is sell 1. It's where resistance is. 47, 47 and a quarter is sell 2. Nancy hasn't told me if we're going to trade to 50 yet. I'm waiting for her input. So as soon as Nancy shares her take on the crude oil market with me, we'll share it with the rest of the group. Okay, 46 even, 45.75 buy 1. And then 46, 45.50, 45.25 buy 2. Okay, the E-mini got slammed yesterday and reversed, and I mean the news, pretty much the fundamental news, everything that comes out on the E-mini says that it should be sold. So we've got this little 2060 area, 2059. Got that low at 58. We've got this high at 70. Got this low at 65. We've got this low. Looks like it pretty close to 65 also. So the 65 area, if it can hold that, it can come back just on into the week short covering. Now you got this, you can see this 58.59 low over here. You can see London held. This was the day session low that day at 65. Way back then. You can see right here that like we talked about last night, 75, 80 was pretty good resistance, and 75 held. So the issue is, can we bust 65 or not? And we may not be able to. Remember, yesterday morning we awakened to selling around the globe except for Hong Kong, which was close to break even. And E-mini did sell overnight with the rest of Europe and Asia, and then rallied straight up off the opening. It just really unanswered buying all the way, and didn't find sellers till we got above 92. And we may be in a similar situation today. The Fed does not want anything to get out of hand. The market can sell just as long as the bottom doesn't fall out of it. The news overnight said that Europe stock market could rally, but it hasn't. So all eyes will be pointed towards the United States and whether they can break it or not. Do an M split from yesterday and put it all together. We've got a B with volume below time. We come back in and split for Globex. You can see that there's pretty good resistance at 75, and there's going to be pretty good support at 65. So our first buy is going to be in this 65, 67 area. That's where support is. I think the market is pointed lower and should take it out. And then our second buy is going to be 61 to 56 for buy 2. On the sell side, we're at 68.75. Last rotate up stopped at 70. Then at 73. So I'd like to sell against 75 if possible. We may not be able to get it there. So we'll make 70, 74, sell 1. 79.84, sell 2. Okay, personal income plus 0.3. Personal spending plus 0.2. Core plus 0.1. Employment cost index plus 0.6. That seems a little high. Chicago PMI 53.4. That seems a little high. Consumer sentiment 90.4, could come in lower. I don't think anybody's really happy with what's going on right now. And then Baker Hughes last week was 471. And I believe the market would expect to see it lower. So personal spending, Chicago PMI, and consumer sentiment will be where the market's focus is. It's going to take a bit to get everything up and published. I'm going to get busy on that. I will be back with you as soon as possible.